is testifying today on behalf of Corporation for Enterprise Development. CFED is a leading public policy advocate that helps federal, state, and private sector leaders move the nation toward a more equitable and inclusive economy. Welcome.
Thank you very much, Chairwoman Velasquez, Ranking Member Graves, and the entire committee for inviting me here to provide this important testimony about the SBA microloan program and H.R. 3737. My name is Ryan Fochler, and in 2004 I became the owner of Dog Paws and Cat Claws Pet Care in Arlington, Virginia. As you all know, small businesses are the backbone of our economy. Dog Paws and Cat Claws Pet Care employs 30 employees in the D.C. metro area, and we provide services for more than 1,800 clients and their pets, including home visits when they are out of town or away at work. We also house a 7,000 square foot doggy daycare facility located in Arlington. The pet industry accounts for more than $43 billion a year in economic activity and experienced a growth rate of more than 5.5% despite the recession, and it continues to show no signs of slowing down. In fact, it continues to expand across multiple industries. For example, car companies now offer a full line of dealer-installed pet accessories. New airline companies have taken off for the sole purpose of transporting animals in pressure and temperature-controlled cabins, and many chain hotels have adopted pet-friendly policies. Which way you're asking yourself, if the pet industry is so fantastic, why is Ryan here? To answer that question, because despite of a credit score of more than 720 and an average growth in sales of 168% over the first 3 years of my stewardship, Dog Paws would not be here where it is today without the SBA microloan program. In recognition of that fact, I am also here to thank this committee for their work on improving the microloan program and to make suggestions on future changes of the program so that it can continue to help entrepreneurs like myself. I am very excited about some of the changes proposed in H.R. 3737, including improving borrowing education, opening the door to more flexible, responsible microloan products, expanding eligibility requirements to increase the presence of microloan intermediaries across the country, and increasing the amount of money the intermediary can borrow for SBA in order to reach more small businesses. I know that there are many more entrepreneurs like myself that were told no by banks every single day. All these factors will contribute to making another entrepreneur's microloan experience even more positive than mine, which came at a crucial time for my business. In 2007, because of our constant growth, I felt it was time to pursue my larger dream of the company to expand beyond dog walking and create a holistic training, daycare, boarding, grooming, and retail facility for people, their pets, in my community. In December 2007, I was pre-approved for an SBA Express loan from Provident Bank, which gave me the green light to finalize our space and move forward with opening our store. Within 2 months, our retail store was experiencing both commercial and media success. We have been received nationally recognized as a green retail establishment. Unfortunately, shortly thereafter, the credit crisis hit in full force. To be specific, despite having never made a delinquent payment, our available credit was slashed from over $56,000 to approximately $1,000 without warning. I felt sick to my stomach. We had grown from, at that point, 7 employees to over 20 at that point. This severe and, in my opinion, unwarranted reduction of my credit made it nearly impossible for us to reorder new products for our retail store. It also created a horrible domino effect. The drastic lowering of my credit lines resulted in a much higher debt to available credit ratio. Now, instead of using about 50% of our available credit, we were at 90% of our available credit, which made us look much riskier to banks. My credit has since taken a nosedive, not because bills weren't paid, but because I was told, you've been a good customer up until this point, but there is no guarantee that you will be in the future. I spent the next 3 weeks visiting what I felt every single bank in the D.C. metro area. I was turned down time and time again by large and small banks alike. Many of the loan officers that I met with sympathized with my situation and told me that I had easily qualified for the before the financial crisis. But with the decline of my credit score, I could not get a loan from banks themselves that probably receive bailout funding. This is when I learned about the SBA microloan program and Latino Economic Development Corporation. They took a look at our books, our history, year-over-year sales, and employment growth, our 100% positive credit payments, and lent us $20,000 in working capital. I also got something else from LADC, quality, in-depth technical assistance for my business. Banks give loans and send payment invoices. Microlenders like LADC do much more. LADC, with all their technical support, set Dog Paws up for success. They have ongoing one-on-one support, group events, and training. They think of us when they meet new business owners and potential clients. Because of over 100 hours of technical assistance I have received from microloan program at LADC, I'm a better businessman, and my company has continued to grow at a sustainable rate. Despite the tremendous help we receive from LADC, Dog Paws continues to seek capital we need to reopen our retail center. We have approximately 1,000 square feet of empty space that current employees, like my manager who was laid off from Fannie Mae, and potential employees whom were laid off from Bank of America could go to work right away. But without the availability of SBA microloan program and SBA lending programs, Dog Paws and Cat Claws would not exist as it does today. We would most likely not have been able to create 23 new jobs over the past year and a half. We would not be trying to figure out a way to get our retail center reopened to create more full and part-time jobs. We would not be able to outsource new trainers, groomers, consignment stores, etc. Before I finish, I want to suggest a few more changes to the microloan program that I know help entrepreneurs down the road. By increasing the microloan program to $50,000 to run a successful small business, especially retail business, larger amounts of capital are essential for ordering product. Do whatever you can to continue expanding this program. Believe me, the need is out there. Microloan intermediaries like LEDC do not have the marketing and advertising muscle that banks and even credit unions have. If they did, I certainly would have knocked on their doors earlier. Small businesses are currently acting as a backstop for the economy and the bailout. Despite the limited available credit, many of us are still finding ways to grow. We are somehow managing to create jobs while companies that are subsidized by the government or even receive bailout funds continue to lay off employees. Thank you for this opportunity to testify here today. I look forward to answering any questions that you may have.
Thank you, Mr. Fochler. Our next witness is Mr. Matthew Shea. He is the CEO of the International Franchise Association, one of our nation's largest business associations with more than 10,000 members. IFA